From talking about the guys in the C-suite to average Americans here, what can you tell average Americans about the outlook for the economy? Your former economic advisor, Larry Summers, says we may be in for a period here in America of lower growth for a protracted period of time. Do you believe in that forecast, and are you concerned that means we're not going to be able to meet the entitlement promises that we made without cutting those entitlements and or raising taxes?
You know, I am always bullish about America over the long term. And if you think about where we were, Steve, when I came into office and where we are now, it's pretty hard to find an economic measure where we're not significantly better off. I don't have to tell you about the stock market and where that's gone. Corporate profits, record highs, but also unemployment now lower than it was pre-Liesman. We've seen the housing market recover, although not as fast as we'd like. The auto industry recovering. We remain the most dynamic, innovative economy in the world. We have this huge comparative advantage when it comes to energy. We're now producing more oil than we import, first time in a couple of decades, even as we're massively increasing clean energy. And when it comes to deficits, we've cut it by more than half. And when it comes to health care, we're slowing the growth of health care inflation to the lowest levels in 50 years. So there are a lot of things there that that give me confidence we're poised to take off. But there's some things that are holding us back. The main thing that's holding us back is inaction by our federal government on things like infrastructure, on raising the minimum wage, on doing some things that would help middle-class families feel a little bit of relief. If we do those things, then we're going to be in pretty good shape. It is true coming out of a financial crisis historically when you look at worldwide trends. It's hard when you have a big financial crisis that precipitates a recession. The good news is, because of the resilience of the American people, but also in part because of some good policies and quick action on our part, we've recovered faster and stronger than most counterparts around the world.
Sorry, Mr. President, I can confirm most of your data as the economics reporter for CNBC, but median family incomes, that's one that is not doing better.
Well, yeah, you're absolutely right, and I think you've heard me on the stump talk about this is the source of anxiety for the American people. Now, these are 20, 30-year trends that we've been seeing. A larger and larger portion of increased productivity and increased profits accruing to the very top of the economic pyramid, and the vast majority of middle-class folks and folks trying to work in the middle class not seeing higher incomes, higher wages. There are policies we can put in place that can help that. Some of it has to do with globalization, some of it has to do with technology, some of it has to do with what some have called a shift to a more winner-take-all economy because capital's mobile and workers are not and they have less leverage. But we know that if we raise the minimum wage, that's 28 million people who get helped. We know that if we invest in the $2 trillion of deferred maintenance that we have on infrastructure, that you got a whole bunch of guys and gals in hard hats who can start going to work. That gives them additional income. That in turn means more customers for businesses. Historically, when the middle class is doing well and people are rising in the middle class, lo and behold, business does well also.
You talked about the stock market earlier. It's now at near record levels almost every day. Are you concerned there's a bubble out there like we had in 01 and 08?
Well, you know, I try to avoid commenting on the day-to-day trends in the stock market. I think what is true is that the Federal Reserve has properly focused on the need for us to bring unemployment down. The cost of unemployment, particularly long-term unemployment, as well as unemployment for young people just getting started in their careers, that's something that has devastating effects on the economy for generations or for decades to come. So I think Janet Yellen has said this is a focus of ours right now. Inflation remains relatively low. What that does mean is when you've got low interest rates, that there's a lot of money looking for returns, and that's probably boosted the stock market significantly.